Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, in the last of a three-part series, Paul speaks with Thomas A Stewart, Executive Director of the National Center for the Middle Market at Ohio State Fisher College of Business, about the center's objectives and the challenges facing middle market executives in today's environment.
I have a general theory to two things. It's sort of paradoxical, right? On the one hand, this group of companies is where growth happens, where it's where organic growth happens, right? So if you look down below 10 million, you get a bunch of companies that will grow, and they quickly hit 10 million, and they become middle market companies, at least by our definition. And then you get a bunch of companies that won't, the dry cleaner, the corner deli, the muffler shop here and there. There are a whole lot of companies where job creation and economic growth are determined more by new business formation than by organic growth in the business, right? Right. And then you get the big companies where the law of large numbers comes in, and they may be growing. There may be large growth in terms of dollars, but in terms of percentage, it's relatively low. And an increasing percentage of their growth becomes inorganic. It's mergers and acquisitions. And so, you've seen a lot of these studies that say that there's a gap between the organic growth of big companies and their stock price. And how does the CEO close the gap? M&A, right? And but it's in the middle where you get these growing companies. And so there's a set of interesting issues about growth, about organic growth. One set of interesting issues is, when do I need to functionalize? When do I need to specialize? When do I go to Dad and say, Dad, I think we need an HR department?
Right.
Or when do I say, social media, we got to stop letting Janie's doing it because she's the youngest person in the company, but maybe we need some training here, and maybe we need. I'm being a little exaggerating, right. but this when do I need to functionalize? When do I need to specialize? How much HR? How much this? So that's an interesting set of questions about growth. And then on the other side, ironically, because these are fast-growing companies, are an interesting set of questions about risk. I think that there's a certain, the data that we see and the sort of sense that I get is that there's a certain, maybe desirable, but maybe not, risk aversion in the middle market in a number of ways. Some of them are family businesses. You get to the second generation of the family business and you start thinking about dividends as much as reinvesting, right? You start thinking how much, we're living. So there's a question there. A lot of the capital is debt capital for other companies, and debt capital is inherently more conservative than equity capital. So there's some governance and capital questions about risk. There's this thing we were talking about innovation or expanding into new markets. How many steps can I take? Each step is relatively bigger for me. So the median age of these companies is 31. So it's not like they're a startup where failure is built in. Failure right. is an option. But, you're 31 years old as a company. You've got 500 employees. You maybe have a couple of second-generation employees even. You've got 500 employees. That's 500 families. That's 2,000 people. You're a fixture of your community. You've got failure's not an option, but you can't hedge your bets as much. Yep. So there's an interesting set of questions here about. So we see some fairly conservative financial management, right, in general, and rapid growth. Maybe just the best of both worlds, but it's an interesting set of tensions.
Yeah, it is. Well, and that tension is sort of inherent in their very existence. There's no question about it. Everything about them, because again, they do not have, as you point out, they really don't have the cushion of the large companies. They can, particularly on the lower end of the middle market. There's that, you're one trade away from bankruptcy, as the saying goes. They're really not, but I think that's how a lot of them think. I talk to a lot of these guys myself, and there's almost a fear level that's what drives them, because they've worked so hard to get to this point, and as you say, they've got all these people that they know. It's not like Microsoft shedding 18,000 jobs, nameless, faceless people. you're right. These are people in their community largely,
Yeah.
that they know,
Yeah.
and they're the ones who support the local baseball team, for crying out loud, and they don't want want to see that, and that's probably as valuable to them as the money, So it is, and I think there is a risk aversion there that is well put. And I also think that your point about functionality is very interesting, because I'm often asked by folks, be they media folks, or sort of advertising agencies, or by just regular people, trying to figure out what we do. Why do you pick those numbers? I mean, 25 million or 10 million in your case to $1 billion, and I tell them, well, you have to pick something. Because you can pick employee size, which is what IBM does, and you can pick revenues, whatever. But granted, that's a rough estimate. It's functionality, I think, is really what defines a middle market company, and that's obviously harder to categorize. But when you face those issues, it seems to me you've made the middle market. Because as a small company, you don't need an HR department. You don't need, or maybe you need them, but you're not going to have them anyway because you're too busy, chasing, putting out fires. But it's when that point comes where you're big enough now where you do need to systematize some things, where there's an HR, where there's a strong finance function as opposed to just a bookkeeper. That's really when you move into the middle market, it seems to me. But on the other hand, it's just that's almost impossible to quantify because each business is different. But no,
to
I
some
think
extent, you have to have a statistical number that just sort of says, here it is.
Yeah.
And, the IBM is picking up the government's lead in categorizing by number of employees, and for certain aspects of what IBM sells, that actually may be a pretty relevant number. I think also that in terms of size, it's one of the things, of course, that as we all know, is that employees per dollar of revenue varies radically from industry to industry. And in retail, you have a whole lot more employees per dollar than you do in most manufacturing, for example. And for us, it made sense to take that manufacturing cut. And what I think is interesting is if you take that as a whole and then take the revenue cut. If you look at it as a whole and the way we've cut it, it represents about a third of the private sector, and then that translates both into revenue and to jobs at about the same number. What's interesting is that we see our numbers now are pretty consistently showing both revenue and job growth in the middle market as being substantially faster than smaller companies or bigger companies, and really for the last 2 quarters of this year, middle market revenue growth has been almost twice that of the S&P 500, more than twice that in the first quarter, actually, on a year-to-year basis. And so that seems to be consistent. So pretty clearly what's happening is we're graduating a bunch of people off the top.
Check back for future episodes of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.